For more on what investors can expect when Nvidia reports, we're joined by John Vinh, KeyBanc Capital Markets senior analyst. What do you think it means? Would that be borne out, those big call premiums, John? I don't know if you watch that. So at least that shows to some extent there's very bullish sentiment still surrounding not only the stock, but what people think the company is going to be able to post as far as earnings.
Yeah, I think certainly, I think there's very good, strong long-term sentiment on the name. I think in the near term, there's a little bit of angst about what the potential Blackwell delay could mean to numbers. Our view is Blackwell was never supposed to ramp in the near term. It was really supposed to be an end of the year, kind of a timing event. So near-term numbers should be absolutely fine. Maybe there was a little bit in the October quarter. We're hearing that customers are backfilling some of this Blackwell push out with more additional incremental Hopper GPU orders. But I think generally sentiment long-term is still very bullish, but I would say there's a little bit of near-term angst about, if this Blackwell delay could impact near-term earnings results.
So, John, just if you were to take a step back and try to make a case for the inherent value of a share of Nvidia right now, is it based on the very bullish future for all of AI? Is it based on the growth rate that the company can maintain for the next 3 or 4 years? What do you think it's based on, and is it worth what it's selling for?
I would say right now Nvidia is probably trading on expectations for next year's earnings. Next year, as you know, Nvidia is ramping Blackwell as well as their GB200 NVL platform, which is a complete server stack platform. And if you think about earnings for next year, we've got them doing over $220 billion in revenues and $5.16 in EPS. And if you think about valuation, on that perspective, it's actually very compelling. It's trading roughly at 25 times next year's numbers. Historically, the stock trades at 35 to 40 times. The broader semiconductor group trades in kind of low 20s. So we think valuation here on this most recent pullback is extremely compelling here.
And the AI infrastructure will never just be built out and you don't need anything else. It's just going to be continually evolving, and there'll be something after Blackwell, and so that, you think that maybe the infrastructure is finally done, and then you move on to the next generation AI plays. But I guess is that more than 10 years off?
Obviously, right now we think the AI market is secular, but obviously, at some point, there is going to be a correction, and all semiconductors, no matter what end markets and how strong the demand is going to be cyclical. We don't see that happening before 2026, and the reason is there's going to be a generational step function increase in performance given GB200 NVL platform. The performance is 30x faster than what you're getting today. Typically, when companies release new chips, next generation chips, you get a X% improvement, which is typically in the 20 to 40% range. So given what Nvidia is releasing next year, nobody can kind of ease up on their CapEx spending for next year. But potentially, after 2025, we're going to have to monitor kind of the build outs of CapEx and where these companies are in terms of digesting and deploying these GPUs, but it's not going to go on indefinitely. There is going to be a cyclical component to it at some point, but not before 2026 in our view.